Hi Sam, what kind of EB-5 capital stack is relatively safe for our investors?
Well, there are a few issues here. The first point is that the more the equity there is in the project, the stronger the capital stack would be. And I think that's a fundamental that anyone would agree to. The issue is, what is that equity? Is that equity real cash, real land, or is it projections from future sales, which is not as strong? It could be very strong if the real estate market in that area is a strong market. So that's the first part. The bigger part, of course, is how much leverage there is in the capital stack. The more the leverage, the weaker the capital stack becomes. Okay, in case something should go wrong, very high leverage is not going to be beneficial to people who are trying to get their money back. The third issue, apart from equity and the quantity of leverage, so in other words, the equity percentage should be as high as possible, the leverage percentage, the debt should be as low as possible. But the third one is, where is EB-5? If EB-5 is on the first position, that's a much stronger position to be than the second position. Now, the second position can be strong, which means if the first position is very small, then the second position is quite strong. But if the first position is quite large, like 30, 40, 50%, then the second position is quite weak. So that's the third consideration. The fourth one, of course, the main one, is what do you really have in terms of a claim, regardless of where EB-5 is in the capital stack. What is the strength of your claim? And that depends upon whether you have a perfected claim on the money. And that is where I think a lot of the projects are playing fast and loose. They claim to be first position or a strong second position in China. But if you look at the documents closely, if something goes wrong with the project, to enforce that claim would be difficult. So, that's something that is worth thinking about. But of course, the quality of the project matters more than anything else. And there is where Chinese investors are at a fundamental disadvantage, because they're viewing American investments through their experience in China, through the eyes of their Chinese investments. They say, for example, that HUA projects, urban projects, city projects in America are safe, whereas rural projects can't be safe. Now, that's true in China. In China, for the last 20, 30, 40 years, when huge numbers of people have moved from rural areas into cities, city real estate has done very well, whereas rural area real estate has done very poorly. That is not the case in America at all. American rural projects can be very strong, and American city projects can be very weak. And therefore, if the project itself doesn't succeed, then the capital stack, it is not going to be of great comfort to have to deal with a situation where the project itself has failed. From a financial standpoint, it's not going to be a great place to be. So these are the four things to consider when you're looking at the capital stack. So it's a long answer, but I hope there's some good information in here.